Hello traders, this is Chris from AAAFx taking a look at the euro. You can see that we have fallen pretty hard during trading here on Friday after initially testing the 1.10 level. This is an area that previously has been important, so it should not be a huge surprise to see this market kind of respect it, if you will. So with that, I've got my eye on the fact that we have been bullish as of late. We are coming off the bottom a little bit late in the day, so that does help as well. With that, I also believe that traders will continue to pay close attention to the bond yield differential between the two countries. And if the interest rates in America continue to fall, that should eventually help this pair overcome 110. The one question, of course, is going to, well, there's two questions, really. There's liquidity, and of course, there's going to be questions asked about whether or not we are heading into a recession. After all, if the Fed is pivoting, is it because inflation's beaten, or is it because they see something kind of ugly down the road? There are real concerns about that, and if that's the case, ironically, that'll drive bond yields down as people buy bonds. And if they're buying bonds, they're doing it with US dollars. Even though lower yields hurt the dollar, there does come a tipping point where so much money is flowing into the bond market, it strengthens the dollar because you have to have dollars to do that, right? So with that in mind, I'm looking at the next couple of weeks as more or less a litmus test on the efficacy of any euro rally. The short-term outlook does suggest that we'll get a little bit of a recovery, but keep in mind, next week is going to be very thin, and the week after that is going to be even worse. So, with that being the case, keep an eye on 108.5. I think 108.5 is an area where you could see a lot of support. If we take out 110 to the upside, that's obviously very bullish. If we take out 108.5 to the downside, 107.5 is a real possibility. I expect a lot of headaches over the next several trading sessions.